When are we going to see the bull market? Well, that's a question I've been getting asked a lot recently. I think the sort of general narrative, the conversation behind this question is ramping up every single day as that countdown to the Bitcoin halving gets closer and closer, right? I'm sure this is only going to be a conversation that gets more and more heated with more and more opinions as we get closer to the Bitcoin halving, which is in April 2024. But today, I want to discuss the likelihood. I want to look at some historical data. Mar's going to come in and discuss some of the greater economical climate and try and help us understand, when and what may a cryptocurrency bull market look like, right? But the quote, I'm sure you've all heard, the sort of narrative that is the most prevalent right now, at least. It's that the Bitcoin halving will be the catalyst for the next bull market. And I'm sure you've all heard this be said multiple times by many crypto influencers, crypto proponents. Anyone that's in the space knows that typically, historically, and we'll delve into that if that's true or not, in the past, the Bitcoin halving has been the catalyst, or at least a significant point, which was often shortly followed by a ramp up in price, right? And the sort of reason behind that, right, if we want to delve into it a bit, is the decreased sell pressure, right? There's now lower inflation rate. Of course, the mining rewards get cut in half. And when might that be? Well, it will be in around 205 days. So you may open up this countdown tomorrow and it says 220 days. You may get a bit confused. Why is it switching around so much? It's because it's not fixed moment in time that the halving happens. It depends on the amount of blocks, right? So a block in Bitcoin, let me remember, I think it's around 10 minutes, right? Something like this. But it's not exactly 10 minutes. So maybe it's, 9 minutes and 53 seconds. Maybe it's 10 minutes and 12 seconds, right? There's a fluctuation. And how these calculators, they figure out when the halving may be is they get an average of, let's say, the last 100 blocks, the last 10 blocks. They then do the calculation depending on what that average time was, and they give you a figure. So the closer we get, the more accurate this number becomes. But if you see some fluctuations between different websites, between different times that you look, don't be too concerned. But Bitcoin halving countdown, when I checked yesterday, was around 205 days, so around 7 months. So the question that you start to think, well, in 200 days, will we have a bull market? Right, that's sort of the narrative that's being perpetrated. That's the idea in many investors' heads right now. But when was the last time that something that everyone expected to happen actually happened? Right, when was the last time that everyone agreed on something happening and then it actually played out within the confinements of cryptocurrency? I think the answer is almost never, right? No one's ever been in agreement of a single thing happening and then it actually happening. And unfortunately, this is sort of looking up to be the same thing happening here, right? And this is, maybe not the most scientific or the most accurate way of running a survey, but I posted on Instagram some time ago. Are you confident that the Bitcoin halving will be the catalyst of the start? I said all the start of the next bull market, right? Yes, I am. 53%. I wasn't sure whether I'm unsure, right? Some seeds of doubt being set in the minds of some cryptocurrency investors there at 19%. Always been unsure, 14%. Then I'm not sure, 14%, right? So the majority of investors, over 50%, are sure that the halving will be the catalyst of the next Bitcoin halving. 23% are unsure. They're sort of on the edge, right? And only 14% do not believe it will be the case. Right? Whenever everyone, quotations, believes something will happen, often we get the total opposite. When everyone thinks that the Bitcoin halving will suddenly solve all of their problems, make them rich, pump their bags overnight. So expect the opposite to happen. So we need a further loss in confidence until only the minority are confident in the arrival of the bull market before, I believe, we actually see something happen, before we increase the likelihood of a bull market happening. And what this also means is that the sort of social commentary, right, the perspective the narrative being perpetrated on social media around cryptocurrency in the news, etc., it's likely only to get worse from here, meaning the next few months will likely be the hardest yet, where even more people start to doubt crypto, even more people start to post that they're doubting crypto, and even more people start to interact with those posts saying they're doubting crypto. And you know how the social media machine works. It pushes the narrative that gets engagement, that keeps people watching, listening. And if that narrative at the time is that the crypto markets aren't doing too good, well, that's what we're going to be seeing on social media. So until we see this chart here, and I'll post this a few more times, you know, switch around until we see this number start to go down and these numbers start to go up, I don't think we will see a a bull market at the point of the Bitcoin halving. And you know, some points on this poll here, although it's not the most scientific way of assessing the narrative from crypto investors, assessing the perspective from cryptocurrency investors. I believe there is a very good pool of people answering. Right, it's not just people like we have here today that understand crypto, that have been in the space for a long time and are really applying themselves to learn more and to understand the cycles. A lot of these people voting are sort of weekend investors. That's what I called them last time. People that, they have a few $100s in cryptocurrency. Perhaps they made some NFT purchases in the past, that by no means full-time crypto investors or even part-time crypto investors, right? They maybe look at the charts once a week. Maybe they read some tweets. Maybe they see some TikToks. But that's sort of the market that's in some cases most important, right? A lot of the people that voted, I'm not. A lot of the people that weren't confident, they followed up their message with a level of understanding of the market. They were talking about sort of the greater economic climate. They were talking about the expectations versus reality. So I think there is a very good pool to sort of learn from here, a very good selection of people answering such a poll. I think it gives us a sort of a broad understanding of the cryptocurrency markets, not targeting just moon boy retail investors, not targeting just people that are educated within the space. You sort of get a whole flurry of different people. But even if the bull market is the catalyst, let's say over these next 7 months, right, things get a lot worse, the narrative changes, the chart switches, people lose confidence. The bull market being the catalyst of the next bull market, it's not as clear cut as it sounds. Yeah, no, just you said it's like Ethereum 2.0. Everyone thought this was going to be a massive pump for the price of Ethereum. That was the general narrative, the general expectation. But in reality, of course, things were far different, right? The expectation of what may happen at the halving is often very different from the reality of what happens at the halving. And this is not just me speculating, this is me looking at data from the past, right? If you ask someone sort of what do you think is going to happen in the bull market, it's going to be the halving happens on Monday, and on Tuesday the prices start going up and we're in the euphoric stage by Wednesday, right? In reality, from historical data, it's very much not been the case. So I've taken a look at the 2020 bull market cycle, the 2016 bull market cycle, to help us understand perhaps how the price may move in the days, weeks, months, years following the Bitcoin halving. Maybe help us gauge what may happen in the future. So a lot of information here. Let's start from the chart. So we can see at this point, this is the day of the Bitcoin halving. This is May 11th, 2020. Not sure how well you can see this chart. Let me also post this link in the chat to the Excel document, the Google Sheets document. So you can open it yourself in case the resolution isn't amazing here. But in this middle point, you can see is the day of the halving. To the right, we've got 1 day after the halving. The right again, 1 week, 1 month, 2 months, 4 months. And then this final point is sort of the first major peak. So typically bull markets, they have 1, 2, or 3 peaks. And this is the point of the first, I think it was around 40,000, 37,000 US dollars for the price of Bitcoin, of course, being the Bitcoin chart. And we can see that it's not a matter of halving on Monday, price, is going crazy on Wednesday. It's a slow burn, even after the Bitcoin halving. So day 1, day 0, let's say we started off at 8,570 the next day. Okay, price increases a bit. A week later, price increases a bit, but then at the point of the first month, prices gone back down again, right? There is not that immediate return to the moon like investors expect. even past the bull market, there is still reasonable levels to start accumulating crypto, right? There are still reasonable prices. It's not a matter of having to buy everything before the Bitcoin halving. There's opportunities even past that date if we look at the historical data. Month 2, again, price is pretty stagnant, not doing very well, right? At these two levels. You wouldn't think you're, approaching the bull market at this level. You imagine putting yourself in this scenario, right? Imagine if we were at this point right now in 2024. The bull market was 2 months ago. Price has been ranging down over the last month and a half. And we're only up 7% since the bull market, right? It sort of starts sowing those seeds of doubt. It's not what investors, I believe, expect when you ask them, what do you think the bull market's going to look like? They're not going to tell you. Maybe 2 or 3 months of nothingness, and then we see a pump afterwards. But in time, the markets do start to turn in our favor. We start to see sort of the first small pump of the bull market, followed by, again, some stagnant markets, some downtrends. And then things, of course, start to take off around 6 months to 8 months later, right? At this point, we start to see the major increase that we expect, right, at this point from the bull market, right? It takes between 4 to 8 months to start seeing the real price action that investors come to expect when you talk about a bull market after the Bitcoin halving. So I hope you can see this on the sheet I've shared. If you want to open it up, take a look yourself. I think the data is pretty self-explanatory. But another important chart here is looking at the 2016 Bitcoin halving. And this is even worse, right? If we have to be truthful here, this is even less supportive of this idea that we will have a Bitcoin halving and an immediate pump in price. Right? We start off on day 0, $648. Of course, looking back at those prices now, you can't complain, right? But at the time, investors seeing the Bitcoin halving, expecting a pump, which wasn't as much of the narrative back then as it is today, were pretty disappointed to see that a day later, next to nothing, 7 days later, there 2%, and then a month later, price is down 10%, right? Sort of this expectation that the halving happens and the price goes up, completely out the window when you look at this chart. Price down 10% from the day of the halving. A month later, 2 months later, okay, things start to get a bit better. And only when you get into months 4 to 6 does the price start increasing substantially. But the timeline, the 2016 bull market was entirely different, right? From day 0 to the first major peak over a year, right? And the first major peak of the 2016 bull market compared to the 2020 bull market is, very different. This is a 10x, while the other chart is a 3x. But you can sort of see that relying on this historical data to try and draw timelines of what the bull market may look like, when things may happen, it's not as clear-cut as perhaps social media would want you to believe. I see a lot of these charts online where they skew the data to make it look the way they want it to. If you take a look at what really happened, there is a very big time, in this time, over a year between day 0 and the first major peak, and around 4 to 6 months of very little price action before we begin to see reasonable and large increases in price. So if we're plotting this on a chart, right, trying to assess, how and when we could expect a bull market to begin, right? And I've quantified this by looking at a notable increase in price. That's what I've sort of said as the bull market starting time. Notable increase in price is around 50% more than day 0, right? And we can argue if that's representative or not, but I'm just trying to get a figure that I think makes sense. And if we think about 2020 bull market, it's 3 months after the Bitcoin halving. If we think about the 2016 bull market, it's around 6 months after the Bitcoin halving. So very important numbers here. And this is really going to play a part when we come later to look at how we can adapt our entry strategies to account for this information. But for right now, keep it in mind, and also keep in mind that the Bitcoin halving is not going to send us to the moon instantly. There's a bit of time between historically before we start to see that major move upwards. So if the Bitcoin halving is the catalyst for the next bull market, historical data still suggests there's between 3 to 6 months of sideways or downward market before we start to see the return to those high prices that perhaps we were promised when the bull market does arrive. But that's one scenario. That's a scenario where we think the Bitcoin halving becomes the catalyst, narrative changes, the expectations switch around. But there's some other ideas, some good ideas, some bad ideas, potentially even worse scenarios. But I'm going to hand off to Amar to talk about how perhaps the Bitcoin ETF will save us.
Thanks, Luke. So we know that major players have filed for spot ETFs: ARK, BlackRock, Bitwise, VanEck, WisdomTree, Invesco, Fidelity. I'm sure you've heard of some of these names. On the next slide, in terms of a Bitcoin ETF, we know that BlackRock has filed with a third-party surveillance agreement, the most comprehensive and likely to pass due to the SEC wary about crypto price manipulation from exchanges. And it is somewhat understandable after all the FTX news. Other companies from Bitwise to Invesco have also refiled after comments from the SEC about this. Positive price action in Bitcoin does coincide with news related to the approval of a spot Bitcoin ETF. However, the gains were given up shortly thereafter. Keep in mind that this is not a futures ETF based on contracts. This is a spot ETF. So a spot ETF makes sure that you have the exposure to the actual asset. So it means more in the grand scheme of things, you actually own what's going on rather than a variety of swaps and contracts for those that understand that concept. Now, let's use BlackRock as a prime example for a timeline. The SEC is required to issue a formal approval or denial within 180 days of the initial filing for a Bitcoin ETF, but can extend that timeline by an additional 60 days at will at its discretion. The approval of a Bitcoin ETF might take 9 months to a year and will not occur until the CFTC concludes its investigation on that price manipulation in crypto exchanges. We do know that BlackRock filed June 15th, 2023, and should receive a decision 6 to 8 months after. Around Christmas time, or maybe post New Year's, and this is putting us near or at the halving. Given the lobbying efforts and BlackRock's scale, if anyone has a chance, it would be them. But I think in great news, or sort of crazy news, 3 days ago, some great news came out. And Forbes, I think, summarized this quite well. So the SEC pushed back on ARK's filing for the Bitcoin ETF. While a decision was not due until November 11th, 2023, the SEC has set a new deadline for January 10th, 2024. This move is quite perplexing, especially given the recent letters from a bipartisan group of congressmen urging the SEC to approve the spot Bitcoin ETFs. In a letter to SEC Chair Gary Gensler, I'm sure you all have heard of by now, some US representatives called for immediate approval of the spot Bitcoin ETF, sort of arguing that investment products offer a regulated and a secure pathway for investors to invest into and engage with Bitcoin, rather than going onto shady exchanges. And they stress the importance of regulatory clarity, stating that without a spot Bitcoin ETF, investors might go to those exchanges, lose their money, get scammed, what have you. And so using the timeline above, we can go through sort of an exercise, right? The ETF can be accepted anytime between now, a year into the future, no one knows. Similar to the XRP lawsuit situation, constant predictions, no one knows. It's a rumor, it's accepted tomorrow, it could be accepted a year from now, like I just said. So going through those timelines I just talked about, and I'm sure Luke will post these slides on the dates in the previous slide as well. Going through this exercise yourself and being more informed of what's going on and plotting these dates, you can sort of see a timeline going through, okay, we know that it's 6 to 8 months, this has to occur, you have to have a decision. Now, it's not maybe a catalyst for the bull market, but it'll be very important to what happens. And we will go into that later on as I give an economic overview. And so before I get into this, I do want to start off with, if you have any questions, this is in the beginning will be a lot more of a informative piece, but at the end I will have my opinion. If there are any questions, please feel free to just jump in, write it in the chat. Just feel free to stop me. So let's get started with the stock market. More specifically, the US stock market, as this leaks into every other market that you know of. Since the crash to S&P levels of around 3,600 to 3,700, we have seen a very uneven recovery. with the major indices like the S&P and the NASDAQ being propelled higher by a handful of companies, while the Russell and small cap companies were staying far behind in this recovery process. So on the screen, you can see an orange and a blue, the blue being the S&P 500 and the NASDAQ being orange. So the NASDAQ tracks a lot of tech companies, whereas the S&P sort of tracks top 500 of the US markets. Now, a giant propeller for that NASDAQ in the orange being, going higher and higher was that AI boom. I'm sure you've heard of. Everyone was talking about AI. For the first time ever, AI was in the hands of retail consumers. However, and that's great, but however, the index rose to sort of bubble levels recently. Given tech stocks' correlation to crypto, this one is an area to be watching. Furthermore, earlier this year, a big case was made about China's reopening of its economy after the COVID-19 pandemic. Back then, we knew that a lot would depend on the performance of the Chinese economy and that its slowdown could inadvertently endanger the US stock market, right, and bring a recession on. Then, in August 2023, warnings were issued about the Chinese stock market rolling over, some issues were occurring, and it signaled some trouble for the US markets. Fast forward to today, and we have seen a failure of Chinese stock market indices to advance higher, despite attempts by regulators to calm down the market. It looks like the buying the dip phenomena has sort of been prevalent in the past year. RSI, for those that do technical analysis, relative strength indicator, the levels are topping up, they're sort of tapping out, and the momentum looks like it's finally run out. We've also got European inflation ratings. They came out this week and will likely still show a high inflation rate. Japan, however, will be important to watch as the Bank of Japan has decided to slowly exit its zero rate interest policy. As many have pointed out, this could create problems for global bond markets, namely a rise in long-term interest rates, which is already starting. The issue is not the monetary, so the money side, but the fiscal side of the equation, the government side. The Japanese government, under the Kishida administration, is starting to face extreme pressure from the population due to the country's high inflation and declining yen, right? Every country would feel the same way. According to Bloomberg, the pressure is real, and a new economic plan will be unveiled to address these concerns, something that will hurt the US bond market, as they hold a lot of US treasuries. And the entire US Treasury curve is now moving toward or above 5%, raising risk that something may break in the economy. A combination of market and duration risk being the longer you hold something, the more you should be compensated, are making investors demand more and more of that money, obviously. According to Alex Pell, an economist at Mizuho that I know, the move towards 5% Treasury yields, it's not a bad thing if the government is spending like this for the entire, going forward. But the issue is investors are worried about the trajectory of the government debt, our huge deficit, and the Fed's quantitative tightening policy, essentially increasing interest rates higher and higher. The speed of the current sell-off in the US government debt is raising the possibility of renewed trouble for banks and other existing holders of treasuries, which tend to get hit hard by the rising yields. For those of you that remember Silicon Valley Bank and that collapse, same exact premise, right? Higher yields create more risk creates more uncertainty, and sometimes if a bank's leverage too high, they just collapse. Any questions so far on that?
Nope, seems clear.
Okay, I'll move into the next slide, other crises. So in the US, we've got a lot of crises mounting. Personal savings declined, credit card use soared, and inflation reaccelerated. Furthermore, commercial banks deposits resumed to decline, and delinquencies on those credit card loans are starting to soar. The real estate market is pricing out many new home buyers and is headed toward an 8% interest rate. So for those of you that want to buy a house, now's not the time, and it doesn't look like it will be anytime in the future. It's the highest level since 2000. And I can get into some of the reasons for it if you have any questions, but the real estate market will not crash soon as much as we'd like it. If anything, it'll have a correction, but the cost of living is remarkably high for Americans and should be considered in analyses alongside the cost for cars nowadays as well. And I think a large issue that I believe is going unnoticed is the resumption of college loan payments starting tomorrow, actually. American consumers have been spending like talks of a recession do not matter. And I believe it's due to the money saved from the pandemic alongside not having those monthly loan payments. When you see more money in your bank account, it's easy to feel richer and spend as such. Let's sort of put this into a perspective, right? The average American salary is around $55,000, a little higher than average, but we'll stick with it for now. Let's say after taxes, you have $42,000 a year. That gives you $3,500 a month. So keep that in mind. You've got $3,500 a month, and the average student loan is around 30,000. So that's $350 a month. That's 10% of your monthly income that you now do not have going forward. And so that's horrendous. And then Fausto, thank you. A lot of Americans have their mortgage rates locked in. Yeah, that's one of the giant contributing factors. When you've got a real estate, you know, and you have 2.5 to almost 3%, it's lows, 20-year lows. Why would you sell? On top of that, in the real estate market, there's no supply. So you're sort of screwed. On top of that, the actual cost of the housing is higher. It's a lot of issues there. But going back to the college payments, 10% of your monthly income that you do not have anymore. It feels like Americans were spending, did not care. Everyone said in the media the economy was resilient. I think we're going to see signs that it's going to turn around very quickly, right? When the average person going to eat out every day now realizes, oh shoot, $350 now is gone. We'll see what happens. We've also got the US government shutdown on the horizon, and our spending on the Ukraine war is not stopping. There was a caveat in the previous end to the shutdown to be able to fund the Ukraine war in the event of a new shutdown, increasing our debt to higher and higher levels. Any questions so far? Any comments? Thank you, Fausto, for the comment on that as well.
I think 10%, of the income, let's say, gone, right? To bills.
Yeah.
Probably a lot more than the average, US capital towards investing, right? Maybe not towards gambling, but towards investing. I think the average person probably invests a lot less than 10%. So, if you had to pick between paying your bills and putting some money into the markets, I'm sure that has a big contributing factor, especially on a market that's is retail driven as cryptocurrency. A lot of sort of the smaller cap projects, very much so, driven by retail investors more than VCs or licensed investors.
Yes, and I see a question about the US government part. So essentially, the US government, sort of like a company, I wish it was run like a company, but essentially every year they get a budget on what to spend. Um, and usually they kick the can down the road, right? They want to spend more and more. And you've got the Republicans versus Democrats essentially talking about, hey, I want this in the bill, I want this in the spending, and they have to hash it out, come to an agreement. When they do not come to an agreement by a certain date, the US government shuts down because it has no funding. And so a few months back, we were poised to have a government shutdown, but instead they said, we'll do a short-term agreement for funding, and we'll kick it down the road. But in that was the caveat for the Ukraine war, which we've been spending a lot of money on. And that caveat was if there's any, because it's a wartime declaration, we can spend whatever we need to. It's not going to affect the budget. And so being unhinged and basically you can spend whatever you want, they have been, and our debt levels have been rising and rising due to that. Hopefully that helps you understand what's going on. If not, let me know. In the meanwhile, we'll move. Okay. Um, I wouldn't say it necessarily makes both sides choose new representatives. Uh, if everything worked logically, yes, it would. But at the end of the day, it's one of those where U.S. politics get involved, and they've got their own agenda on both sides. And it's one of those where if you want to stay elected type of things, you've got to follow that agenda. So it's a hard topic to sort of go through, but it's a little interesting, but we can get into that later. All right, now the Fed. I'm sure you all have heard about the Fed. Before we get into the implications of a government shutdown, let's review the Fed and their dual mandate. So the Fed is headed by Jerome Powell, and he controls the interest rate and the unemployment in the US. Those are that dual mandate thing. With the high inflation that we've seen in the US and the record low unemployment, what do you think is the way out, right? When you increase inflation or you want, lower um un yeah, you want lower unemployment and vice versa. So the only way out of this is higher inflation that lasts for longer, so that we can get that low unemployment to unemployment. The Fed wants to have unemployment. Um, Obviously, it's not great, but for the economy to stay on track, you want some unemployment to level set what's going on. So 2 weeks ago, the Fed meeting resulted in no rate hike. However, Jerome Powell reiterated the central bank's commitment to fight inflation, with dot plots showing the possibility of one more rate hike this year and interest rates staying elevated for at least 2 years, something that the market didn't like. I see a question, doesn't unemployment cause welfare? Yes, but the reason why it's good is because the entire economy will start shifting to projects that are more financially responsible. So if you think about it, welfare is like 1%, and let's just say it's like $1 million in the grand scheme of things, versus if the entire economy was 50 million, they'd rather pay out that 1 million to make sure the economy is good on that 50 million. So you've got a GDP surplus almost. Hopefully that answers your question there. So obviously the markets didn't like that the interest rates are going to be higher, staying there for longer. But I think the bigger issue is that government shutdown possibility. Obviously, there's a lot of scenarios if that occurs, but I'd be aware of something that Jerome Powell sort of mentioned at the Fed's recent press conference. And it's that if a government does shut down, the Fed could be flying blind. And that's the words that he used. Essentially, it won't get the economic data that it needs to make interest rate decisions. It was recently estimated that about 90% of the Fed staff would be furloughed in a government shutdown. And if it lasts to the point that the Fed misses an entire month of economic data, it could make the next FOMC meeting much more unpredictable. And so furloughed, the term is essentially you're not fired, you're just not paid. So you still have your job, but you're not doing anything, obviously. And you just come back whenever the government gets funded. So this is essentially significant because investors are torn whether or not the Fed will deliver a final rate hike this year. Somewhere, is it going to be November? Is it going to be December? We don't know yet. And markets need to price that in. And if they're very unnervy, you're going to see a market downturn. So any other questions on the Fed? All right, crypto time it is. So historically, September has been a bad month for Bitcoin and the broader crypto market. This September, surprisingly, has been relatively good for BTC and most altcoins. And as always with crypto, the market can change in just a day. So we all say this, but always be wary. Let's see. Comment real quick. So the budget the US government has is kept in the Federal Reserve. No, the Federal Reserve has that dual mandate. So they can only control unemployment and inflation. So they're separate from the government. The budget is decided by Congress and the House, essentially. They get to choose that. Hopefully that answers your question. Going back to crypto, SEC Chairman Gary Gensler is one to keep on top of. Gary's circle has warned that more enforcement actions are coming for crypto exchanges and DeFi. And given that they've already messed with centralized exchanges, it looks like they'll turn their focus towards DeFi, specifically decentralized exchanges. Another factor to look out for is one that's been hanging over the crypto industry for months now, and that's another enforcement action against Binance. It's safe to say that the SEC's most recent comments foreshadow this, especially with a Wells notice, but it's also safe to say that it could be priced in already. So depending on the nature of the allegations towards Binance, They could still cause a lot of enormous volatility, as Binance is considered the safest exchange in the crypto market currently. And I think the final crypto factor that we should all be keeping in the back of our mind is Tether's alleged lending. So for those who know about it, Tether is lending billions of dollars to entities that they claim they have long-standing relationships with. At the end of the day, you take this at face value, but then you have to think about it. What's going on? This suggests that someone somewhere is short on cash. It could be an offshore exchange. It could be a well-known exchange, but this could pose an impact to the market if that exchange is found out. Who knows who it could be? So very, very interesting and something to take note of. Any questions, comments on the crypto market? Perfect. Thank you, Fausto. All right. Is it bad for Tether to hide who they're lending to? Um, yes, yes and no. It all depends on the exchange, right? It's good for the exchange because if they got found out that they're having liquidity issues, right? They don't have enough money to service what's going on. They're gone, right? You lose all trust. There's going to be a giant pull, right? We saw that with Binance when they had the allegations, crypto.com. I think FTX was a giant one as well. So you don't want that happen. So it's bad and good on that sense. It's good for the market. It's bad for us as consumers because you go out and you're using an exchange and you have no idea. So Tether is sort of walking a fine line. Also, you have to keep in mind, right? USDT, the money is pegged to the actual stable coin. And let's just say this exchange goes under. Well, now your USDT is at risk. So it's good for them. It's not good for us, in short.
Yeah, it helps them cover up their fraud.
Yeah. So it's a lot of, there's always, and that's also sort of goes back to, right, the SEC. And although they are very shady, and I can sort of we'll get into that a bit later. As shady as they are, some of the points they do bring up, like that price manipulation, does make sense. So I do agree with them somewhat.
Yeah, and perhaps ETF and so the way things are going, it can help clean out the markets. Again, I think that's something that we need, right? But it may sort of reflect negatively on price. There's a lot of manipulation. I think that's sort of, we can agree, even though there's not, clear-cut evidence in many cases. In some cases, there is significant price manipulation within the cryptocurrency markets, which, if you're on the right side of it, is great for your bags, right? On the other side, it's not good for your bags. So we'll reflect in a fairer, in quotations, cryptocurrency markets going into the future.
All right, we can move on to the next one. All right, so now we're going to switch into my opinion. Hopefully this is the part you guys enjoy the most. So since that initial drop in the S&P in that US stock market index to 3,600, 3,700, I've been pretty cautious about a large and deceitful bear market rally in the stock and crypto market, namely Bitcoin and Ethereum. I remain skeptical about the Fed's ability to deliver a soft landing, and it's one that Vanguard believes as well. In both of our views, many signs point to a more harsh scenario, with the environment increasingly favoring a significant market sell-off. And let me go into that Bitcoin and Ethereum thing real quick. I'm sure you all have noticed Bitcoin and Ethereum have been rising, whereas altcoins have been declining. This is a combination of people moving into a safer asset, but also at the same time, when you see these altcoins bleeding, something's obviously not right. Bitcoin and Ethereum have large market caps, and as such can move the entire index at will, right? It doesn't matter if an altcoin is bleeding. If Bitcoin moves up 5%, that altcoin is going to move up. Bitcoin moves down 5%, that altcoin is going to bleed more than 5%. So it's been a very interesting, hey, indexes, the Bitcoin Ethereum index is rising and rising, but these altcoins with good fundamentals aren't. So you're thinking, is this a flight? And then you also have to look at wallets with over 1,000 BTC because they're considered whale wallets. And as Lucas touched upon before, they probably know something that we don't, or they're smarter than the average investor, right? Those wallets that hold over 1,000 Bitcoin have not increased. If anything, they've decreased. So there's some concern that we're not there just yet, not close to a bottom. Now, the narrative in the media is clinging to the opinion that the US economy is headed for that soft landing or no recession, with how resilient it is, right? People keep spending, people keep spending. And we had talked about that 10% less of your monthly income. I believe it's easy to get caught up in the now and prolong the inevitable, but the signs of a break are playing out with CNN's fear gauge now at extreme fear. Soft landing. So soft landing is they increase interest rates, as high as they possibly can. Inflation comes down and nothing happens. Unemployment's still low and inflation's back in check. Essentially no recession. That's what a soft landing is. But it's not looking likely, sadly. So we even have the Fed saying that no recession is likely and that they're not trying to cause a recession. Confident words, I'm sure about it. So since the summer of 2023, one of the things that I've noticed, some other people have online as well, each dip in the VIX, which is the volatility indicator index, pictured here, that preceded the 2020 market crash, was followed by an explosion in this chart. So thank you, Luke, for increasing that. If the VIX, essentially last week, my analysis was if the VIX puts in a new high, essentially goes up higher and higher, it'll be very bearish for the market, furthering the increasing chances of the current weakness and sort of looking towards a market crash coming soon, which the VIX end up posting a new high, further worsening the situation that we have at play. So you can hopefully see the dips down there, and that was the pre-COVID crash. And so the higher the volatility, sort of the more fear that's going on, less liquidity, it's not looking good type of thing. And when the VIX goes down, that's bad for the economy. It's bad for the market. Market does not like that. So there's also another thing that I like to talk about, sort of the Bitcoin ETF and that delay that they had, where the SEC pushed back ARCs. VIX, so VIX is volatility indicator index. So it uses a bunch of things to look at that relative strength indicator. It looks at momentum, a lot of selling, that type of thing. So if there's a lot of puts rather than calls, so puts being people want to short the market, calls being people want to long the market. Essentially, they think the market will go up versus the market will go down. That's another one that they can use. So essentially, if there's a lot of people betting against the market, there's a lot of people selling, the volatility indicator index will go up. Okay. And so this delay in approving the ARC21 shares Bitcoin ETF may be a broader strategy from the SEC. Some speculate that this move allows institutions like BlackRock to consolidate their positions, right? Whether or not this Bitcoin ETF gets approved, BlackRock has been buying Bitcoin. And this could hinder platforms like Binance that are sort of not in the government's purview. The underlying aim might be to assert control over the increasingly decentralized financial ecosystem. This delay could also be linked to banks like Chase UK closing down cryptocurrency services, sending a message that strong oversight is required for the digital asset space. Now, if the SEC continues to delay this, it could slow down momentum that Bitcoin and wider crypto market have gained, possibly causing capital flight from this markets, right? Less people would want to be invested if the market's going to go down and down. And the SEC is setting itself up for future challenges. When the pendulum finally swings back, I think the rush of capital and the energy of people wanting to invest into these might take the markets by surprise. To me, this seems like a possibility of a sell the news event when the actual ETF does come about, because it will at some point. It has to. Long term, however, this is bullish. Keep in mind that a rally cannot start, as we had talked about, if everyone believes that it will. Prices will have to lower until sentiment dies down, with my timeline of a rally occurring around the end of 2024 to beginning of 2025, based off of sentiment and after the actual halving. Now, there's also a possibility of a black swan event, which is a combination of essentially a lot of bad events in the stock or crypto market. It sort of drags the price down for everything. And I might have that a picture of that on the next slide.
Last slide.
That's the last slide. Okay, perfect. Back over to you then.
Awesome, awesome. Thank you very much. And I guess something I think you mentioned briefly, but if you had to put a timeline on it, what would it be? If we're sort of thinking about both the ETF being released, you got an idea of when that may be. Broad spectrum is fine, and sort of a worst case scenario, best case scenario, if you can.
Definitely. So I think best case scenario, we've got they approve it in the next few months. And honestly, it does not matter if it's a bear market or bull market. The amount of inflows from institutional and retail investors will start that immediately. So we could have a best case within the next 6 to 9 months. That regular case that I have is around end of 2024 to beginning of 2025. And then worst case, probably 6 months after 2025. So about halfway into there. And so it all depends type of thing. And that chart that we had posted earlier, using those dates that we had put on there. And I can also send you the script. Make sure you're reading into the market and plot it for yourself.
100%. Well, thank you very much. I think Haraj had one last question in the chat.
Let's see. I think I just missed that. So several bad events together are referred to a black swan. Yes, that is correct. And there's a slide that touches on it at the end. So I'll get to that. And do you think mid-2025, I think by mid-2025, we definitely will see something. That's also given current sentiment, right? A lot of things could change very quickly. But given this current sentiment, based off of the fact that most likely an ETF will be approved, we've got the halving, and hopefully sentiment dies down enough to where people start disengaging. That's the time. And I think by 2 years, that should definitely all occur.
Okay, great. Well, thank you very much. And with this new information in mind, you've got to sort of think about potentially making some adjustments to entry strategies. And this really depends on which side of the spectrum you sort of fall on here, right? If you're investing from income, you're going to have a much easier time with this next conversation. But if you're investing from savings, like a lot of people I know in the cryptocurrency space, right, that took profits before, they want to reinvest those profits now at lower prices as well. Things just got a bit harder, right? I think another interesting point that you mentioned there, Amar, is this sort of AI bubble we saw. Essentially, it prolonged the timeline, right? We saw this reappraisal, we saw prices return upwards, and all we've done is move that few months of negativity, let's say badness in the market, and we've just pushed it later down the line. You agree that sort of get the right idea of that?
Yeah, that's exactly it. Everyone was very hype about it. We've pushed it down the road, only prolonging the inevitable.
100%, 100%. So if you're investing from income, if let's say, you're taking 10% of your salary, 15% of your salary, and you're putting that into crypto every single month, you're not really thinking about it. You can keep it going as long as you got a job and you got some job security as well. And you got your, 6 months of backed up cash for an emergency scenario. All this means for you is more time to accumulate at potentially very low prices. So, that's potentially even a pro, right? Even a benefit if there is a longer negative market, was granted. God willing, you have a reliable job, reliable source of income. There's not too much you'd want to really worry about here. Perhaps making some adjustments in line with your risk tolerance. Maybe you want to increase your sort of rainy day fund, that emergency fund. Maybe you want to put some more money in there after the things we've discussed today, which I think makes a lot of sense. But if you're investing from savings, let's say you made 100K in the last bull market, you want to invest that into the bear market. You've been going for a year, you're around 50%, 60% done. While these timeline going forward may be a bit different to sort of what you came into the bear market expecting, and it may be time to readjust the average monthly investment in line with this new timeline that we've been discussing here today. So there's some things we can do to make this easier. There's some things we can do, some predictions we can make depending on the position that you want to play. I really view there's sort of three positions that you could play here. So you could prioritize full capital allocation. So this is sort of playing towards it, a more optimistic prediction of when the bull market may be, but also a priority on getting capital in the market. You don't want to be sidelined with 30%, 40% of your investing capital still in cash. You would rather, maybe miss some opportunities to buy at lower prices, but ensure that you get most of the capital you had wanted to allocate into the markets. You may also prioritize a low average price. You may also prioritize or sort of want to look for opportunities far beyond the Bitcoin halving. This is the sort of position where you would be more pessimistic, we could say, when we think that the bull market will begin far after the Bitcoin halving, right? In that scenario, sort of prioritizing getting lower average entry prices that may arise after the supposed catalyst of the Bitcoin halving. Or you could do, what I prefer to go with, and it's trying to find the balance of both, right? Trying to find a position that looks at the best case scenario, looks at the worst case scenario, and tries to position themselves somewhere in the middle so that they are not reliant on either one of those predictions. And how that may look depends on where you want to sort of finish out, right? At which point you want to finish your allocation of funds into the cryptocurrency market. So if you're prioritizing full capital allocation, very optimistic on when a bull market may arise, perhaps you're setting your target date either at the time of the Bitcoin halving or some months after that date, right? Perhaps you're looking at doing it 2, 3, 4 months after the Bitcoin halving. If you're a bit more pessimistic, if you think that the Bitcoin halving will not be the catalyst, the greater economy is not in the shape to produce a bull market yet, if you don't think the ETF going through is likely, or you don't think that it will cause an influx of price immediately, perhaps you want to position your sort of finish line points at which you would like to invest all of the capital you have saved at a much later point, perhaps a year, perhaps 6 months, perhaps 8 months, perhaps 15 months into the future after the Bitcoin halving, right? Maybe looking at even 2025, mid 2025, if you are really pessimistic on when the bull market may arise. Or perhaps you want to go with something that's more a balance of both, right? Sort of positioning yourself somewhere in the middle, maybe 6 months, maybe 8 months after the Bitcoin halving. So depending on sort of which option you want to go with, depending on where you want to position yourself, you're going to have to revisit your entry strategy and just change some numbers around. If your previous target was 2 months after the bull market, that would give you, 2 months after the Bitcoin halving, that would give you around 12 months more to accumulate. So you want to push that back to 6 months after the Bitcoin halving, then you would have 14 months to accumulate. And if you're using the portfolio chart that I sent out before, it's a matter of changing, one number. It's not like it's a difficult thing to calculate. The important part is that you go and do it, and then you adjust and see how much you should be investing on a bi-weekly basis, a monthly basis, a weekly basis, to ensure that you reach those figures, to avoid over-investing, to avoid potentially under-investing, so that you are in line to complete that dollar cost average in line with your strategy, in line with your theory, your prediction on where you think a bull market may begin. So for me personally, looking at between 4 to 8 months after the Bitcoin halving, I'm sort of in the position where I'm investing more from savings. So this is a decision you've got to make. It's an uncomfortable one to make. I'd rather being able to invest from income would be much more comfortable in this position, but you don't get everything. There are benefits to investing from savings that you don't get when you're investing from income. It's just something you've got to keep in mind, something you've got to calculate for yourself, something you've got to plan for, so that you're not in a position where you've invested too much too early, much earlier than you'd like, or in a position where you've waited too long and you have a bunch of cash sat around, but the price is already increasing and you don't fancy buying the top. Any questions on that? Or Amar, do you have any points you'd like to share as well?
I think you've hit on them. I think we've done quite a bit of analysis so far.
Perfect. Sounds good. Any questions? Awesome. Well, it sounds like everyone's clear. I'll take that silence for everything's making sense. Now it's time to go away, look at your investment strategy, sort of maybe do some recalculations. Of course, tomorrow, the start of the month, I believe. So time to buy in line with your strategy. Maybe you're buying a bit less than you were last month. And of course, that's totally fine, right? We've got to come back, reconsider these things, make changes. Don't sort of look at this now and think, I've invested too much, I got to go off and sell some. What we're here doing, we're investing with this slow and steady pace. Even if you think you put a bit too much in, right, just rebalance what it is you've got left and plan for the future accordingly. Of course, if anyone has any questions for me and Amar, you can find us in the Discord channel. You can message me on WhatsApp. Happy to help. Happy to review anyone one-to-one if you want to sort of go over your portfolio progress. You want to recap, reanalyze, maybe readjust. Be more than happy to help. Send me a message. But I believe that's everything from us here today. Amar, any more points, or we good to wrap up?
I think we're good to wrap up. If you have any questions, like Luke said, please feel free to reach out and we'll provide what insight we can.
Awesome. Awesome. Well, great having everyone here. I'm sure I'll see you all back next week. I'll put the recording, I'll put the slides, I'll also put this template, which I realized halfway through I hadn't approved anyone to look at in the Discord channel, so you can all go in and watch and read this and sort of see the numbers yourself. I think it's very insightful to take a look at this. Even in best case scenario where the Bitcoin halving is the catalyst, it's not that immediate reappraisal in price. There's some stuff happening before that. So make yourself familiar with the history of the cryptocurrency markets. Good seeing you all. Sure I'll see you all soon. Thanks for stopping by.